Imagine a game of badminton where one team has been smashing and dominating the other team continuously, but suddenly there's a shift in momentum and the other team starts making a comeback. Similarly, in the stock market, the hammer and the shooting star are candlesticks that represent these kind of movements between the buyers and sellers. The hammer indicates a potential bullish movement after a downtrend, whereas a shooting star represents a potential downtrend after an uptrend. Both the patterns tell a story between the buyers and sellers, so understanding can give us a trading edge. I am Pranav VK, an NISM Certified Trader and Trainer, and you are watching another episode of Stockshaala by Kotak Securities. In this session, we are going to cover what is a hammer, what is a shooting star, how are they formed, and how to interpret them. Most importantly, we are also going to cover the common mistakes to avoid. A hammer is a bullish reversal pattern and it appears at the bottom of a downtrend. And the candlestick of a hammer represents just like a hammer, and that's why it's called so. Now let's go over to the whiteboard and understand the structure of a hammer and the formation. The hammer has a small body at the top, a small shadow at the top, and a longer shadow at the bottom. Let's understand its formation. This is the opening price, this is the closing price, this is the high price, and this is the low price. The price started at the opening price during the start of the day, but during the day the sellers took control and pushed it very low. But the sellers were not able to retain the aggressiveness. So that is when bulls took over and pushed it to a higher price. And again, finally, the fight between the bulls and bears finally ended up at the closing price, causing the candle to have a small body at the top and a long shadow at the bottom. This kind of a candle generally represents or shows itself at the bottom of a trend. And this represents a bullish reversal that is possible after a downtrend, which means the possible direction for the market to go after this is an uptrend. I have taken an example of HCG on the weekly time frame, and here, as you can see, I have marked the hammer that was appearing after a specific downtrend. Now after this, as you can see, the stock has rallied to the top, and that is exactly how a hammer shows you that the downtrend has stopped and now it's going to be an uptrend in the upcoming days. A shooting star is exactly opposite of a hammer. It is a bearish reversal pattern that appears at the top of a trend. Now let's understand the structure of a shooting star on the whiteboard. A shooting star is defined by a long shadow at the top and a small body at the bottom. Now let's understand the formation of this specific candle. Here, the opening price is the top of the body. This is the closing price. This is the low price, a very small shadow at the top, bottom. And this is the high price. Now, at the start of the day, this was the opening price. And during this time, buyers took control during the day and took the price all the way up to the high price. But they were not able to sustain it. The sellers took control and bought it all the way down to the low price. But finally, it ended at the closing price, which was just above the low price. Now this suggests that buyers were trying to push the prices higher and higher, but they failed terribly, which showcases that the sellers are stronger than buyers in case this kind of a candle is appearing at the top of a trend. Now let's identify a shooting star in the real charts. I want you to focus your attention onto this specific candle here. There was an uptrend in this specific stock continuously, but after this continuous uptrend, there was 3 rejections. You can ignore that for the time being. and focus your attention back onto this candle. Here, the body of the candle is very small. We have a long shadow at the top, which is a clear definition of a shooting star. What this suggests is that the uptrend is weakening and moving forward, there is a possibility of the stock coming downwards. Now let's discuss the key differences between a hammer and a shooting star. A hammer always appears at the bottom of a trend, whereas a shooting star always appears at the top of a trend. For a hammer, the wick is formed at the bottom, which means it has a longer wick at the bottom, whereas a shooting star has a longer wick at the top. A hammer indicates buyers taking control, whereas a shooting star indicates sellers taking control. Do we need confirmations for either of them? Absolutely. The hammer requires a confirmation wherein a bullish candle is there just after the formation of a hammer, whereas for a shooting star there should be a bearish candle right next to it to confirm that it is a bearish trend. In conclusion, the hammer and a shooting star are like the hero and villain of a movie. The hero at the start of the movie gets beaten up, goes through a lot of troubles, but finally rises from these ashes. But whereas the villain, on the other hand, blasts off with so much power at the start, but towards the end is dead, right? Similarly, the hammer is a hope that you're going to get in a downtrend, whereas a shooting star is the negative sign you're looking at in an uptrend. If you liked what you learned in this video, then go ahead and share this video with your friends and family. And probably go ahead and even search for a hammer or a shooting star in your favorite stocks. I am Pranav VK, an NISM Certified Trader and Trainer, and you're watching Stockshaala by Kotak Securities, and I'm going to see you in the next video.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.